$56.03 billion in revenue. With an explosive 33% growth rate, Meta Platforms was supposed to deliver a celebration with this Q1 earnings that then Mark Zuckerberg dropped a number that shook Wall Street. $145 billion in capital expenditures on one side, a booming and machine printing cash on the other, a tsunami-level budget being poured into the AI abyss. That 5% after-hours drop was a market panic, or another case of Zuckerberg seeing the future before everyone else. What's up, guys? Welcome back to Deep Dive Stock Earnings. This earnings report from Meta is basically a declaration of war in the AI era. Zuckerberg is making it clear he's no longer focused on short-term stock movements. He's going all in, pouring massive capital into building the dominant compute infrastructure for the next decade. Meta reported $56.03 billion in revenue for the first quarter, up 33% year-over-year, blowing past Wall Street expectations, while an $8 billion one-time tax benefit boosted profits. Even after adjusting for that, the $7.31 EPS is still incredibly strong. The core engine, its family of apps, contributed over 99% of total revenue. This shows that Meta's fundamentals are not only intact despite macro pressures, but are actually entering a phase of powerful secondary expansion. A 33% revenue growth rate at Meta scale is almost unreal. It tells you that ad machine isn't slowing down. In fact, it's been upgraded with AI as a rocket booster. The EPS beat also confirms the quality of those earnings. Meta right now has one of the strongest cash-generating engines in the market. And that's exactly why Zuckerberg can afford to go all in on AI. Here's the most shocking signal from this report. Meta raised its 2026 capital expenditure ceiling to $145 billion. Zuckerberg is aggressively investing in servers, high-end PaaS, and data centers at an unprecedented scale. That massive number triggered an immediate 5% after-hours drop as investors worried about cost control. But underneath the reaction is a very clear message. Meta is determined to outspend and outbuild every competitor in the AI arms race. $145 billion, that's basically the market cap of some tech companies. Zuckerberg's logic is simple. Whoever owns the strongest compute infrastructure owns the future. That after-hours drop is just a knee-jerk reaction to short-term spending. Long-term, this level of investment is building a hardware moat that's nearly impossible for others to cross. The report also shows a strategic shift from the year of efficiency to the AI efficiency era. Headcount only grew 1% year-over-year, proving last year's cost discipline is still in place, but R&D spending surged 46%. That means Meta has successfully transitioned, no longer blindly scaling headcount, but instead concentrating capital and talent precisely where it matters most. AI. Meta right now looks like a lean, highly optimized fighter. Just 1% headcount growth versus 46% R&D growth. That's a massive leverage ratio. It shows they've moved away from brute force scaling into a tech-driven efficiency model powered by AI. Thanks to AI-driven tools like Advantage Plus, Meta's ad business achieved something where both volume and pricing growth at the same time. Ad impressions increased 19%, while average price per ad rose 12%. That means Meta is not only delivering more reach, but also significantly improving conversion value. These numbers directly outperform the ad growth trajectory of Alphabet Inc. People used to worry about Apple's privacy changes hurting Meta's ads, but AI has completely reshaped targeting precision. Double-digit growth in both impressions and pricing is almost unheard of for a mature ad platform. It proves Meta is still the most efficient monetization machine in the world. Even if you're skeptical about its AI vision, it's hard to ignore how much cash this business generates. Zuckerberg also revealed that the next generation model, Llama 4, is currently in training with promising early results. Meanwhile, Meta's ecosystem keeps expanding. Threads is approaching 200 million users, while Reels and Instagram continue to drive higher engagement through algorithm improvements. Even with geopolitical challenges in certain regions, Meta's global daily active users remain massive at 3.56 billion. 3.56 billion daily users, that's basically half the planet, interacting with Meta products every day. The Llama 4 update shows Meta isn't just building apps, it's going after the foundational layer of AI, and Threads' rapid growth proves Meta still dominates the social ecosystem. In contrast, Meta's metaverse ambitions look much weaker this quarter. Reality Labs generated just $400 million in revenue, down 2% year-over-year, contributing less than 1% of total revenue. The numbers make it clear Meta's near-term growth story has fully shifted to AI. The metaverse is now more of a long-term bet than a current earnings driver. Let's be real, Meta today is an AI giant wrapped in a metaverse shell. Zuckerberg knows exactly where to allocate capital. The underperformance of Reality Labs is actually a positive signal. It shows management isn't stubbornly doubling down there, but instead shifting focus to where the real opportunity is, AI. Despite spending $20 billion in capex this quarter alone, Meta still generated $12.04 billion in free cash flow. The company holds over $81.02 billion in total liquidity, with a very stable balance sheet that gives Meta the ability to continue aggressive share buybacks between $10 billion and $15 billion per quarter without diluting shareholders. So on one hand, they're aggressively investing in the future. On the other, they're still returning massive cash to shareholders. Over $80 billion in liquidity means that even if the AI race escalates tomorrow, Meta can easily keep up. This kind of financial resilience makes it extremely hard to compete against them. Compared to peers, Meta's 33% growth rate has clearly pulled ahead of Alphabet Inc. in the competitive social landscape against Snap Inc. and TikTok. Reels has firmly taken the lead in monetization. Meta is building an AI-driven social ecosystem that competitors simply can't replicate. This isn't just in earnings win, it's a full-spectrum competitive advantage. To sum it up, Meta's earnings show what it means to go all in. It's ramping capex despite Wall Street doubts, betting AI will reshape social and advertising. So the question is, can Zuckerberg build an AI empire with 145 BS, or is this another metaverse mistake? This is Deep Dive Stock Earnings. See you next time.